All right. Are we live? I think we're live. Looks like we're live. Let's get started with today's Bitcoin price analysis. So we just had CPI released, and the futures market shot up by I don't know 100 points in a minute, roughly, and so that's why I suddenly had a bunch of alerts, Bitcoin alerts that were triggered, and I was wondering what's going on. But yeah, because I was distracted by something else and forgot the CPI was coming. But anyway, so Bitcoin did move up a drop in the last, in those first few minutes after 8:30, and we'll come back to that in just a bit. So let's start with the monthly time frame, as we usually do. So I've added this inversion for value gap. I'm presenting arguments as I see it for both ways. I'm not suggesting that I think you should buy or sell, for sure not. I will just say I only buy Bitcoin. I do not sell. No plans to sell. And I study this because it just helps me determine when I want to buy. Whatever decisions you make should not be based on this. It should be based on your own analysis, but this may inform your own, make your own decisions. All right, so we have here, I've shared arguments why I thought Bitcoin is likely to go back down to 50K or 49, 50K, and maybe even all the way down to the 40s or so, maybe even, the mid 30s. And that has to do with that there's so much imbalanced liquidity down here. And we've seen that was the path in the past. Okay. Now, I don't think that was because that was the path in the past. That doesn't mean that's how it has to always be. But it just seems like there's too much potential here. And also, Bitcoin, will do, I've heard someone say this, and it'll do what brings the maximum pain to the most people, which is an interesting idea. And a lot of people who, I guess the bigger buyers stand to gain a lot if price drops down and more retails sell off or panic sell, and then they pick it all up before going even higher. May not sound very nice, but that certainly seems to be how the world works. And that's why getting educated on how these things work and studying it gives you an advantage, that's for sure. All right, so that's the monthly time frame. We do have this inversion for value gap here, and I will point out that we have respected it, not even coming into it. So, and also I will say that this is the current month of July 2024, and we have 2/3 of the month remaining, 20 days left. So this candle can certainly develop further, but we want to keep an eye on this and see how it handles in terms of this BTC and the inversion for value gap over there. Let's go down to the weekly. Now, on the weekly, I've also pointed out that what I see are strong signs of bearishness, and that is because for the first time since over here, since this candle, this weekly candle, where we closed below all these equal lows over here, and that swing low, right? That was at the bottom of this big drop. For the first time since then, we have a weekly close below recent swing lows, other lows, and that was last week's weekly candle, right there, and that we formed this market structure shift. At the same time, we also broke below this trend line, which is an indicator that so-called retail looks at. And we closed below the 50% equilibrium of the BTC here, this buy-side imbalance, sell-side inefficiency, or bullish for value gap. All of that, to me, is an indication of weakness and the likelihood that we're going to go and at least rebalance the, perhaps down to the 44, down, maybe not all the way down to the 30s, maybe, but it's just hard to imagine that we don't rebounds down here. Of course, we might move up first. We might move back up first significantly. We might go back into the high 60s first. I don't know. But, and we'll look at that in the next, on the daily time frame. But I have a hard time accepting that we're not going to go at least down to the mid to low 40s, because this is just, it's just, I mean, how could you not? Just look what's there. And we do have what could qualify as original consolidation over here. First stage distribution, right? Maybe second stage distribution, and then whatever we consider this with smart money reversal, and maybe that's first trade. Or maybe over here we're going to have first stage distribution or consolidation, or sorry, accumulation. I mixed them up based on which time frame it is. But sorry, this would be accumulation, smart money reversal, distribution, and then maybe we have another distribution before perhaps coming down here or curling back up. So that's what I'm seeing on the weekly time frame. And let's go to the daily time frame. Now, on the daily time frame, as I pointed out, we have been in a downtrend for a while now, since we had this change in the state of delivery. Well, arguably, maybe that's a change in state of delivery. Certainly this is. And then we have this market structure shift based on these candles for sure, where we close below these swing lows. And we have these bearish order blocks, which we've come up and respected, continued to go down off of that, and coming all the way down, making these new lows below the swing low over there, as we saw. Okay. Now we've been coming back up a little bit, but so far we're still respecting this daily SIBI, this daily fair value gap, bearish fair value gap. I marked off a dealing range from this high to this low, right, 0 to 1, from this high to this low, and that is because we swept liquidity above here and below here, So that's a dealing range end to end. We want to see that price swept liquidity on both sides. Let's see here. And my just noticed that we wicked up, or previously, prior to CPI coming out, we had briefly been above the 50% line. We haven't closed above it, at least not yet. In all, I mean, it's certainly reasonable to imagine that we would move back up into the optimal trade entry range between 62 and 79% around here, which also overlaps with this SIBI, overlaps with this bearish order block, right, which I have marked off over here. Mean threshold of the order block would be about, I guess, over there, in that midpoint. And we definitely want to see what happens over here. So short term, we could curl back and go lower. That would be a pretty steep decline, pretty steep. So short term, I can certainly see us coming back up into 61, 62, maybe 63 range. But then I would expect that we're going to continue lower unless we actually have a weekly close above the previous week. In that case, then either we're going sideways for a while or we're going back up. So, oh yes, let me mention the prices. So 63,866. If this weekly candle closes, or next week, or whenever, I guess we have to see how it develops. But if this weekly candle closes above 63,800, then there's a possibility that we're going sideways or curling back up. Okay, so that's what we see here on the daily. On the daily, again, if today's candle closes above the high of yesterday's candle, which was 59,459 yesterday. So if we close above yesterday's candle, then that's a further argument that we're moving higher up towards the optimal trade entry range. If we don't, well, then we wait another day and see what happens. We see whether we're going to go sideways or go lower. Looking at the 4-hour candle, we are, we just started a 4 hour, well, we've got another 3 hours and 10 minutes left. So what we're seeing here, and this wick up, of course, was during CPI, well, as I mentioned, at 8:30 a.m. today, July 11th. So what we have over here is we had a low, and then a high, and then a higher low, and then a higher high, making this a failure swing, and this would be a mitigation block if we're bullish, right? So we, I believe what I said is correct. I'm a student of this, so if you're watching this and you think I'm wrong, please tell me. All right, so that would make this a mitigation block over here. And if that's the case, that is an argument for short-term bullishness. Okay. And we see that we have respected this bullish for value gap that runs through the center, almost the center of the mitigation block. So get that. And we are respecting this, we're respecting the midpoint, the mean threshold of the mitigation block. And we have another BTC up over here. So looking at the 4 hour short term over the next few days, it's not that hard to see an argument for, as we've been talking about, to move back up into this SIBI over here, roughly 79% of the way OTE, optimal trade entry numbers, which is also inside this order block, which we, now that is on a higher, from a higher time frame, that would be a bearish order block. Hold on, where did we see this? That was on the daily time frame, right? So that coming up into that daily time frame, and at that point we want to see what are we respecting, right? Are we going to respect this daily bearish order block? Are we going to respect the mean threshold midpoint on that by closing below it, or are we going to close above it? And then, of course, we'd have to see, you know, if that, or if we see signs that we're likely to keep going higher. So these are just my observations, pros and cons for each position, both moving up, moving down. And I'm interested in your thoughts, your questions. Leave a comment. If you like it, leave a like and let me know. Again, we opened up, let's just go, I'll go to the 1 minute here. This was at 8:30, 8:29, 8:30. We had this move up of, what was that? That was $737 in a minute, 1.26%, which it's more than you know, is most common for Bitcoin, but it's not outrageously uncommon, even without big news like the CPI. We have $812 over 10 minutes not that long ago. All right, that's all for today.